Hello everyone, I am Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hi.
Thank you for joining us today as we're looking at the fundamentals that are driving markets currently. So Peter, the Fed delivered its 75 basis points rate hike yesterday.
Yeah, actually it did deliver the 75 basis points rate hike yesterday. In its accompanying statement, the bank practically reiterated that it will continue tightening its monetary policy as appropriate, depending also on the data which are going to be coming in. I would be highlighting Jerome Powell's, Fed Chairman Jerome Powell's press conference, which was half an hour later. In his press conference, practically the Fed Chairman stated that the inflation is too high. And at the same time, though, also stated that practically in the next meeting of the Fed, the bank may consider a 75 basis points or a 50 basis points rate hike as being appropriate. That tended to create some ambiguity on whether the Fed's going to be continuing to tighten at the same pace or not, or slowing a little bit down. And more or less it was characteristic that the market's reaction was a little bit surprised, especially after Powell's press conference. That was the big issue.
So how did the markets react?
Actually, the US dollar weakened. Not much, but still. And it showed that maybe the market was pricing in too much, which the Fed didn't exactly deliver, but more or less the decision was in line with market expectations, a little bit lower. It was characteristic also that gold's price tended to gain from the weakening of the US dollar, while at the same time US stock markets seem to have stabilized. That's another indication that market worries for extreme tightening of the Fed's monetary policy may have eased a bit. However, I would like to see also how the American session opens about US stock markets in order to get a clearer view on whether the market sentiment is heading to.
Okay. Also, weren't there some developments with the ECB yesterday, right?
Yeah, after ECB's interest rate decision on Thursday, where the bank practically announced rate hikes to come in July and September, we had a substantial increase of yields for Italy and Greece, which are member states of the Eurozone, and that tended to create some extensive worries about the possibility of fragmentation of yields depending on the country. The bank made an extraordinary meeting yesterday, and at the meeting practically concluded that it will more or less expedite the production of a financing instrument which would more or less allow the ECB to avoid such a fragmentation of interest rates, of yields for nation states. However, I think the market may need more concrete evidence to actually react and provide some support for the euro here.
Okay. Also, didn't the AUD get some support yesterday?
Yeah, it also got some support. If I'm correct, even it was the highest gains against the US dollar among majors. It should be noted that we had Australia's employment data for May during today's Asian session. And it was characteristic that the employment change figure jumped from 4.5K to over 60K. On a more surprising note though, the unemployment rate did not actually tick down as expected, remained unchanged at 3.9. Overall, the signs are that the Australian employment market is still tightening, given the rise of the employment change figure. But on the other hand, the fact that the unemployment rate actually failed to drop may have sent some mixed signals. It was characteristic that in the minutes following the release, the Aussie actually dropped just a bit against the US dollar. Nevertheless, later on recovered. So, on the other hand, on a macroeconomic scale, I would be noting that the tightening of the Australian employment market would practically allow RBA to continue to tighten its monetary policy, as we have mentioned also yesterday.
Okay, interesting. We have Bank of England's interest rate decision today, right?
Yes, today is BOE day. We get BOE's interest rate decision. The bank is widely expected to hike rates by 25 basis points. Actually, the market has priced in more rate hikes to come. So for the bank to actually provide some support for the pound, or for the release to provide some support for the pound, the bank will have to sound quite hawkish, quite confident, foreshadow more rate hikes to come, actually reaffirm the market's expectations for a tighter monetary policy. On the flip side, though, we see that the GDP rate is in the negatives for a second consecutive month. That was for March and April. So there may be some hesitation there, because the tightening of the bank's monetary policy practically lessens the opportunities for the UK economy to grow, as it practically drains the liquidity out of the market. And I would dare to say that should there be some hesitation in the bank's accompanying statement about where the tightening is heading to, we may see the pound actually tumbling. Other than that, the main or the base scenario, if you prefer, would be for the bank to hike rates, maintain a rather confident tone, which could provide some support for the pound.
Okay. What else is on the calendar today?
Well, we have the US housing data. Allow me to have a look. Yeah, we have the housing data from the US, the building permits and the housing starts for May. Both seem to be forecasted to drop a bit. That could be weakening the US dollars. It would imply a slowdown of economic activity in the US construction sector. I would be highlighting also the US initial jobless claims figure. It's for the past week. It's expected to drop finally. And if actually so, could actually provide some support for the USD, as it would imply that in the past week the US employment market may have started to tighten a little bit as the number of of jobless claims has started to fall. And the last one would be the Filifete business index. However, that would be, yes, for June. It's expected to rise a bit and could also provide some support for the US dollar, as it would imply practically an improved not only market sentiment but also economic activity in the wider Philly area.
Okay. How about the Bank of Japan's interest rate decision tomorrow?
Yes, that's tomorrow during the Asian session. Now, in contrast to BOE, which is expected to hike rates, we have BOJ, which is expected to remain on hold, keeping rates at minus 0.10%. The main issue here is about the bank's forward guidance. The bank has practically defended its ultra-loose monetary policy in the past month. It was characteristic that BOJ Governor Kuroda had made such relevant comments, and more or less BOJ's loose monetary policy tended to weigh on the Japanese yen. That's why we have seen the JPY actually weakening substantially against the US dollar. If I'm correct, yesterday or in the past few days had reached even the level of 135 yens per dollar, which would be quite high, record high actually. And we would like to see whether in its forward guidance the bank will continue to defend its ultra-loose monetary policy, whether it will keep practically its huge assets buying program afloat and defended. Should that be the case, we may see JPY actually entering another weakening cycle, with the possibility of BOJ actually supporting the JPY with market operations, buying JPYs, defending its value, being more possible than before.
Okay, anything else worth mentioning?
Actually, we had a surprise this morning. We had SNB, the Swiss National Bank. It hiked rates. It performed a double rate hike. And that took the markets by surprise, providing some support for the CHF. I think the bank responded to the inflationary pressures within the Swiss economy with a shock and awe rate hike. It was beyond market's expectations, and I think there seems to be some decisiveness to curb those inflationary pressures within the Swiss economy. At the same time, we have to note that Swiss banks had been complaining about the negative rates for a while now, and it was a big issue. So practically the bank may have found a way to serve both. On the one hand, curb inflationary pressures, and on the other hand, ease any reactions from Swiss banks. Also, I would be noting oil prices, which seem to be dropping yesterday. There was a surprise release by EIA, which showed that there was another rise of US oil inventories in barrels. That took also the markets by surprise. It was expected to show a negative figure, i.e. a drawdown for US oil inventories. That didn't happen. Instead, a buildup was reported. Thus, there may be a slack in the US oil market in the past week. On the other hand, though, tight fundamentals for tight supply and a stronger demand tend to imply that any correction lower of oil prices could be temporary. There were some analysts which tended to mention that a slowing economic activity in the US due to the tightening of the Fed's monetary policy could also negatively affect demand for oil, which is quite possible. However, for the time being, we still tend to maintain, I wouldn't say a bullish outlook, but in the long term, yes, we may see oil prices rising even further.
Great, thank you, Peter, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
Welcome everybody. We're making a start with Euro USD, which actually dropped. That was back on the 13th of June and stabilized somewhat despite the Fed's interest rate decision. Let's make some readjustments here. Switching the 1.0480 support line into resistance line by coloring it in red. Let's hunt for a new third support line. Switch to the daily chart. Weekly. Monthly even? Let's go back to weekly. Daily. No, weekly. So practically we haven't seen such low prices since 2003. Is that correct? Yeah, actually we had seen them once again in 2016. That's pretty low anyway. Let's have a look for S3, which could be placed at the end of this week here. That would be colored in green, and it would be the 1.0067. Round it up a little bit. 6.5 as well. Six and 5. Drilling back down to the 4-hour chart, readjusting it. Note how we had to go back to 2002 to find the last support line at 1.0065. Keeping also the S2, however, that would be now being placed at 1.0210. practically, I would like to highlight how the new S3, the new third support line, has brought on the horizon the possibility of a parallel level between Euro USD, which is indicative of how low the pair is actually trading right now. Give me a sec. Sorry. 455. Let me double check this just to be sure. 1.0480. Second resistance line would be the 1.0625. The final resistance line noted. Note how it rests practically in these peaks here. Beautiful level. At 1.0755. Reaffirm this. Yep, that's it. So Euro USD practically remained relatively unchanged despite the Fed's interest rate decision. There was a slight rise here, but that wasn't enough to actually convince traders for a change of trend. Practically, the sideways movement seems to be continuing between the 1.0480 and the 1.0350. I would be highlighting though that there may be some slight bearish tendencies here, so those should be watched out for. Other than that, I would expect the price action of Euro USD to remain between the pre-mentioned levels. Now, should the bulls actually take charge, and we may see them breaking the 1.0480 and start aiming for the 1.0625. And other than that, should the bears take over, we would expect the price action to break the 1.0350 and aim for the 1.0210. Closer than that, we have the newly found 1.0065. Pretty close to parallel level, there's 3. It's once again indicative of how low the pair has actually come. Note that these levels have not been seen here, here, and here. Prior to that, we have to go back to 2016, that's 6 years back. Let's have a look at Gbp Usd. Now, Gbp Usd, which got some support at the release of the Fed's interest rate decision, however, is now decisively moving lower since the Asian session today. There is a small catch here, and that would be the BOE's interest rate decision. And the second issue I would like to highlight is that I'm not quite satisfied with the resistance lines that are too pretty close. I would like to add another one up here. 2660. $1.2660. 14. Come on. Off for 1.2660. Yep. That's it. Okay. Could be mid-level here. Let's add that as well. And that would be around the 1.1935. Let me adjust this. Yep. So for the time being, we tend to maintain a bias for a sideways movement between the why not? Let's readjust this one. $19.35. The S3 now becomes at 1.1817. And the S4 S4 1.1637. So for the time being, we tend to maintain a bias for a sideways movement between the R1 1.2210 and the S2 1.1935. Note the touch here, However, we have to note that BOE's interest rate decision is still to be released today. That should be around 2 o'clock in Cyprus time. That would be GMT +3. I would look to note though that should the interest rate decision to be released by BOE actually excite pound traders, say for example, if the bank hikes rates as expected by 25 basis points and at the same time maintains a clear hawkish confident tone, we may see Gbp Usd actually rising, maybe even breaking the 1.2210 and start aiming for the 1.2330. On the other hand, though, the market seems to be pricing in the possibility of a slight disappointment by BOE as Gbp Usd is retreating. Should the bearish tendency continue, we would expect the price action to break the 1.2070 and start aiming, if not break, also the 1.1935. Let's have a look at USD JPY. That was moving lower, decisively lower, may I add. Okay. We have the breaking of the 134 support line now has been broken. The 133 support line has also been broken, which tends to imply a weakening of the US dollar. Oh, a strengthening of the JPY, it's also possible. Okay. Let me adjust this one up here. Note how the upward channel was broken, which we had marked yesterday. This one comes low as well. Let's readjust this one. Yeah. $129.55. Let's color this in red. In green, sorry. I would place another one here, somewhere here. Yep. You can see how this was a prior resistance line, however, also provided some support here and here, so I wouldn't neglect this one. Let's keep this colored in green, and that would be the 128.05. So this should read 133. 134 and 135.6. Now it's clear that the price action has been decisively bearish. It has clearly broken the upward channel which we had mentioned here. That was yesterday's analysis. Note also, however, that it has broken the notion of a sideways movement between the 134 and the 135.60, as it has broken the lower boundary, the 134 support line now turned to resistance, and it has also broken the 133, currently aiming for the 1.35. Let me correct this one. We tend to maintain a bearish outlook for the pair, given also that there seems to be a clear downward movement of the RSI indicator, which is approaching the reading of 30. On the other hand, though, I would like to note that the price action has reached the lower Bollinger Band, and that may force the price action for some stabilization or even a correction a little bit higher. But for the time being, the bearish outlook seems to be present and seems to be prevailing for the pair. Let's delete this as well. It's no longer needed. Yeah, it's clearer. Downward movement. Should the bears maintain control, we would expect the price action to break below the 131.35 and start aiming for the 129.55. Albeit, I would expect it actually to break just below 131.35 and start stabilizing somewhat. On the flip side, should the bulls regain control over the pair, we would expect it to break the 133, break the 134, and start aiming for the 135.60. Let's leave this as well. Okay, let's have a look now at USD CAD. Sideways movement, practically respecting almost slight break here, the 1.2890. Yet the price action moved higher. We could widen this a little bit. Somewhere here. 102.710. So it would be 1.71. Let's readjust to the price action. $1.2865. Note how the pair uses level as a resistance line and now has been turned into support line. We could also readjust a little bit lower the S2, placing it somewhere here, even lower here. That would be it. 1.2780. $1.2865, 1.2970 holds, 1.3045 also holds, and we have above it the 1.3120. Note how there are some bullish tendencies in today's European, late Asian and early European session, as practically also the RSI indicator seems to be agreeing with that, as it has risen actually bounced. It had reached almost the reading of 50 and bounced back upwards, reflecting the upward motion of the pair, currently aiming for the reading of 70. So I wouldn't be surprised to see bullish tendencies being maintained. In such a case, we may see the price action breaking the 1.2970 and start aiming for the 1.3045. On the flip side, a sideways bias for the time being between the 1.2970 and the 1.2865 seems to be existing. I would require clear breaking of the R1 in order to switch my bias for a sideways motion in favor of a bullish outlook. On the flip side, to the downside, we would expect, should the bears take over, the pair to break the 1.2865 clearly, which actually reversed the downward motion yesterday. And in such a case, the 1.2780 could come under USD CAD's sights. Let's also have a look at AUD USD. Should be similar. Yep, but in the reverse. Because the prior pair was USD CAD, this one is AUD USD. It seems that the US dollar is still leading. We note that AUD USD has been correcting lower after bouncing on the, let's readjust this one, 0.7035. Okay. Interestingly enough, also the 0.6950 was respected. But let's correct this. So the final resistance line is set at 0.7265. Medium resistance line being set at 0.7155. The first resistance line, which actually reversed the upward motion of the pair yesterday, that would be the 0.7050. Only 100 pips lower. We have the first support line being placed at 0.6950. Note how it actually managed to fend off the downward price action during today's European session. Lower, but still I would like to readjust this here. $0.6850, another 100 pips lower. And the final support line would be placed at 0.6730. Sorry about that, let me correct this. Come on. So for the time being, we tend to maintain some bias for sideways motion here. Let me delete this, is no longer relevant. After being unable to break the 0.7050, the sideways motion could be confined between the 0.7050 and the 0.6950. Both levels were tested in the past 24 hours and held the ground. Should the bears take over though, I would expect the price action of AUD USD breaking the 0.6950, start aiming for 0.6850, which actually provided some support around here. That would be during Tuesday's American session. Lower than that, we also note the 0.6730. To the upside, and should the bulls regain control, we would expect the AUD to reverse course, break the 0.7050. That would be a prerequisite for a bullish outlook, and start aiming for the 0.7150, which used to be more of a support line. As the price action is now below it, has turned into a resistance line. Higher than that, we also note the 0.7265, providing resistance once, twice. Note the RSI indicator around the reading of 50, however, with a downward slope, reflecting practically the lower levels, which are being marked here, the red candlesticks. And moving now to the Swissy, surprise, surprise. That's a nice chart. Now, some readjustments may be required here, but the main story here is that the price action of the Swiss franc, of at least of USD CHF, had been a clear price action of the US dollar strengthening and the Swiss franc weakening. That was practically until today's Asian session, or to be more exact, yesterday's American session, when we had right here the correction lower with the weakening of the USD from the Fed's interest rate decision. But note the wide red candlestick being marked practically of around 200, a little bit over 200 pips in today's European session, as the Swiss National Bank actually performed a double rate hike, taking the markets by surprise and providing considerable support for the Swiss franc. Let's have a second look at the levels. The R1 being placed at 0.9875 was reaffirmed here and here, so it's still valid. The 0.980, yeah, once, twice, 3, aimed for here, 4, still valid. It actually missed the R3 target at 1.0065, but I would keep it due to this one, this touch here. To the downside, and despite some signs of stabilization for the pair, I would keep the 0.9760. Actually, why not? Let's level it up a little bit. Place it at 97.65. Here we go. Also, we note the 96.40 prior resistance line now turned to support, actually providing some support here a little bit, but still. And the lowest level would be the 95.50. It's a very wide drop which was performed by the pair during today's European session. However, I would expect the price action to show some stabilization. Note how the RSI indicator is definitely heading lower towards the reading of 30, which tends to imply that the bears are still present. So it should not take by surprise the possibility that the pair will move lower even still. On the flip side, though, note how the price action's steep drop has broken the lower Bollinger Band and is now forcing it higher. It's also interesting to see how the price action got some support by the 100 moving average here. For the time being, there may be some signs of stabilization, but we may see the bears once again taking over, given that the sentiment is to the downside, as the RSI indicator remains and is still aiming for the reading of 30. Remains below 50 and is aiming for the reading of 30. Let's have a look now at the Kiwi. I would like to have a look at gold. Okay, nothing much here. A little bit upward movement, which was performed with the Fed's interest rate decision. but the 1836 resistance line seems to be holding, actually keeping the upward movement of the precious metal contained. So I would be keeping the R1 at 1836. Also, the bias for sideways moving, given that not the S1, neither the R1 have been broken, is still valid. To the upside, I would keep also the 1870 resistance line, even higher than 1903. Use the touches in both resistance lines. Test it. And to the downside, we keep the 1807, which practically provided support here. That should be, on Tuesday the 14th, early 15th, the Asian session. Lower than that, there's 1787, and even lower, the 17.60. Sorry, 17,760. Let's have another look at WTI before moving on to stock markets. So WTI has been moving downwards, as we have mentioned in the fundamentals as well. Downward trend line being formed. WTI support lines have been broken, all be broken. Let's reverse them to resistance lines. $118.50 was that in red. Please, thank you. Let's go hunting for support lines now. Once here. No touch. Could be a little bit higher actually. 109.85. 109.90. Yep. Even lower, the next support line could be placed. Okay, there may be a mid level here, but in my opinion, that's too close. This is a level. This is a level. Yeah. 107.55. Another resistance line here. That's at 105.10. And we have to the upside the $113. And that would be the 115.80. And the highest level would be the 118.50. So we tend to maintain a bearish outlook for the commodities prices, for WTI's prices, given that also the RSI indicator is below the reading of 50, actually aiming for the reading of 30, pretty close. Also, as long as the price action remains below the downward trend line, which was incepted since, let's have a look, to be more exact, the 14th of June, we tend to maintain our bearish outlook, in which case we may see the price action approaching the 109.90 or 110 level. Wouldn't be surprised to see it that low. Should this one be broken, we may see the price action starting to aim for the 107.55. To the upside, and for the bulls to take over, would require a clear breaking of the pre-mentioned downward trend line, the 113 resistance line, and the pair to actually aim, if not breach, the 115.80. Let's have also a small sneak peek. US 30. Oh my god. Dropping. Dropping again. Look how similar the movements are behind the main US stock market indexes we have. Dow Jones. Note the relative stable movement between the 3,325 and the 32,575. Note the sudden drop Monday, Tuesday, Wednesday, and the restabilization, and now it begins to drop again. You can see the similar movement. This was the Dow Jones. Let's have a look at S&P 500. Pretty much the same. A sideways movement that was around the 30th until the 9th of June. A sharp drop lower, stabilization, and a renewed drop during today's European session. The same applies also with the US 100, i.e. Nasdaq. So practically that would imply that most probably the bearish sentiment for the US stock markets has restarted in the pre-market hours today. However, I would like to see how the American session actually opens to get more clues about the market sentiment in the equities market today. That should sum it up. From all of us here at IronFX, best wishes for solid trading.
The USD tended to weaken against its counterparts yesterday, as the Fed delivered a 75 basis points rate hike as we expected. Yet after Jeremy Powell's press conference, the greenback tended to move lower. In this accompanying statement, the bank stated that the committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. In this press conference, Fed Chairman Jeremy Powell was reported stating that from the perspective of today, either a 50 basis point or a 75 basis point increase seems most likely at our next meeting, which did provide some ambiguity for the bank's intentions. The market may have expected more decisiveness from the bank that may have been partially let down. Nevertheless, the monetary policy tightening of the Fed continues and at a rather fast pace and could continue to provide some support for the USD. Today, in the European session, we note the release of Bank of England's interest rate decision, which is expected to hike rates by 25 basis points, and it's characteristic that the market seems to have fully priced in such a scenario materializing, which also expects more rate hikes to come. High inflationary pressures in the UK economy tend to drive the bank's decisiveness in tightening its monetary policy further. Yet, on the other hand, it should be noted that the UK economy in April shrunk for a second month in a row, with the GDP rate dividing actually deeper into the negatives, thus advising caution. For the pound to get some substantial support, the bank will have to demonstrate its determination to curb inflationary pressures in the UK economy by proceeding with further rate hikes, keeping a confident and decisive hawkish tone in its accompanying statement. Anything less, like any hesitations as further tightening, could lessen the growth prospects of the UK economy, may cause the pound to weaken. Gbp Usd reversed in downward movement, yesterday jumping and testing the 1.2160 resistance line. As the price action has broken the downward trend line, guiding in since the 10th of June, we switched our bearish outlook initially in a favor basis of sideways movement. Should the bulls take over, we may see the pair breaking clearly the 1.2160 resistance line and aim for the 1.2300 level. On the flip side, should the bears again control over cable's direction, we may see it breaking 1.2015 support line and aim lower. Tomorrow, during the Asian session, we highlight the release of Bank of Japan's interest rate decision, and the bank is widely expected to remain on hold, keeping interest rates at minus 0.10% and its ultra-loose monetary policy afloat. It should be noted that the bank's insistency on ultra-loose monetary policy seems to be weighing on the JPY, which has retreated against the USD to low levels, surpassing at some point in the past few days 135 yen per US dollar. It should be noted that Bank of Japan's Governor Kuroda, in a speech that has stated that week the Japanese households were tolerating price increases, which may have been interpreted that the Japanese economy could bear more inflation, yet later he retracted and apologized for the comment. Overall, should the bank actually maintain its ultra-loose monetary policy intact and actually defend in its forward guidance, we may see the yen starting another weakening cycle. USD JPY dropped yesterday yet respected the 133.50 support line. Hence, we currently tend to maintain or bias for a sideways motion between the 133.50 support line and the 135.20 resistance line. Should the pair find fresh buying orders along its path, we may see it breaking the 135.20 resistance line and aim for the 136.50 resistance level. Should a selling interest be displayed, we may see the pair breaking the 133.50 support line and aim for the 132.30 level.
Hi everyone, Emily here. Today I will be talking to you about some crucial trading tips.
Three important qualities traders tend to ignore. Your personal life should complement your trading career. In other words, if your personal life is a mess, how can your trading be at a top level? You have to protect your personal life and keep your mind clean from outside interfering, as this could affect your trading. Second, you have to enjoy the ride. A successful trader knows how to enjoy his life on the rainy days and on the profitable days. That means if you reach an objective, let's say a profit target, do something for yourself or celebrate. If you failed, move on. Third and final, you must have a balance between your personal life and your trading career. Some traders think that by spending 16 hours per day in front of the screen or doing research, they will be successful. That is a no-no. You have trade, but you should also spend times with your kids, your wife, your family, your friends. So make sure you're chasing the right things. It may sound hard to trade and keep a full-time job at the same time, yet a number of part-time traders proved that this is doable and actually may prove quite profitable. We have a couple of tips for such a trading. First, be organized and disciplined. Make a plan. Target specific events. Have your technical and fundamental analysis well before the event takes place and stick to your plan. Don't forget to keep it sweet and simple. Secondly, use the technology given. Use the stop loss, take profit levels as well as pending orders and incorporate them in your trading. They tend to take lots of pressure off of you. The same applies for alerts, which inform you instantly when a particular trading instrument has crossed a particular level. I know it takes time to master this, but believe me, they are worth every minute of the time and effort spent. Thank you so much.